Hello guys, good morning. Today is Sunday, the 1st of June 2014, and I have received a lot of questions about stop loss. You know, stop loss is just when you buy a stock. Let's say you buy stock at $20, okay? And you think that the stock is going up. So, which is very good. But before you do the trade, if you are a professional trader, before you do the trade, you should make what we call a plan for the trade. It means, when should I enter to a trade? Where should I buy the stock? And where should I put my stop loss? Now, stop loss is just you put a stop under your purchase price. For example, let's say you buy a stock at, let's say, $20. You put stop loss at $19. So if you buy 100 shares, okay, and let's say you buy today and tomorrow the stock doesn't go up, it go down. Now if it goes down and it reaches $19, this stop loss becomes what we call a market order. It means it will sell with any price that you have in the market. Now, what do most of the beginners think? The beginners think that it's okay if the stock goes down, because it may be going up again. And this is the worst idea that you can have. When a stock goes down, you will never know where it goes. So hoping that it doesn't go that much is just hope. And if you want to become professional trader, there is no hope, there is no luck in your trading. If you buy a stock and you hope it goes up, okay, and you think that luck is everything, that means that you are not a professional trader, and most of the time you will lose money through the year. And maybe you lose your account in 1 year or two, or maybe you don't make that much money, or you are neutral. Each year you don't make no money at all, so you work and you don't make nothing. Okay, so stop loss in trading. I'm not speaking about investing, because in investing it's another thing. Okay, so I'm speaking here about trading, like day trading or swing trading. Okay, swing trading, this is what I am doing here in the whole channel. I have just done few times day trades and explain about what is day trading, but 99.99 I don't day trade. I always swing trade. This is my specialty and this is what I do. Now, so stop loss is just to protect you from the downside of the stock price when it goes down, because the price goes against you. What does it mean? It means the market goes against you. So you don't let your feelings enter to your trade. You say, for example, I buy a stock today, okay, and I will see tomorrow what will happen. This is not trading. This is what we call gambling. Gambling, it means you just hope. You don't know what's going on. You have no plan of your trade. That's why you do mistakes. And mistakes that you do like this, if you don't put like stop loss, this mistake can cost you a lot of money. It can cost you to close your account. Okay? You say why or how? Because if people are shorting the stock, big guys like a hedge fund, he go to a stock that it is going up for 1 year or 2 years. The stock was $10 and now it is $50 in 1 year. So the stock has gone that much up, but you don't discover this stock. Now you come at the end and you think that the stock will go up, which is a good idea. I don't say it's not a good idea, because you will never know what will happen in the future. So if the stock went from $10 to $50, it means it's a good stock and it's, let's say, a good company. Now, when you buy, let's say you buy at $50, you must put a stop loss, because you will never know tomorrow what will happen. So stay alert. Be careful always when you do, because when you put your money into the market, if you don't take care of your money, they will take your money, and no one say thank you. Because in the market, if you lose money, if the stock you bought it at 50 and now it's 45, what does it mean? It means 5 points. It means if you bought 100 shares, a lot, which, with 100 shares, if you bought 5 lots of 100 shares, it means you bought 500 shares. It means you will lose $500. Now, not $500, because if you bought 100 shares and the stock goes from 50 to 45, you lose $500. Okay? But suppose you buy 500 shares and you think that you are sure that the stock will go up again because the stock is good. 500 shares, if the stock goes from 50 to 45, you will lose $2,500. Now this, I just give you some calculations in order to understand what you are going to do. Now, when you are careless of your business, by the end of the year you will be a loser. This is for sure. I'm telling you, this is for sure. Or at least you will not make money. The whole year working, buying, selling, but at the end you get nothing. Because of the mistakes that you repeat always and always and always. You don't want to stop your mistakes. And you have ideas that are false. You have false ideas about stop loss. The stop loss is just to protect you. And someone tells me, oh, okay, the stock was 50, it can go to 45, but it go again up, and it reaches 50 and go to 60, 70, 80. Okay. Now, I am telling you something. How do you know that it will stop at 45? Does someone from the stock market send you a message, a text message, by your phone? Or it send you an email? Or someone calls you from the stock market? Or he send you a pigeon, you know, the pigeon, and with the old stuff with the small paper in the leg of the pigeon, and they say, oh, we are not going to go down more than 45, but we are going up. Who tells you this? So you are just hoping. You all your business, you are not doing business. You are doing gambling operations. When you gamble, what does it mean when you gamble? You gamble, it means you give all your money to the stock market and you ask other traders, please do whatever you want. Okay? So, if someone is a hedge fund and he comes to short this stock, do you think he will stop at 45 from 50? No! He will add more and he will ask his friends, if he has friends, he say, short it! Kill this stock! Whatever is this company. The company is Google or Facebook or Twitter, wherever it is. When the guys are shorting, either you short with them or you get out. It's like when you see a train coming and you are in the middle of the tracks of the rails. Okay? A train is coming. It will crush you. And you stay and say no. The guy who is driving, he will see me and he will stop. No. The market doesn't stop because the market do what it should do. Okay? You can't control the market. So if we can't control the market, what we control? We control when we buy, when we sell, and where we put our stop loss. For example, I bought a stock at 50. Let's say I put a stop loss at 48. I say, okay, if the stock goes to 49, I'm okay. And if it goes up, it's good. So I put it on 48. But if it reaches 48, I'm not saying, I am not staying in the trade, because from 48, if you bought a lot of 100 shares, I will lose $200 from 50 to 48. $200, I lost it. Okay. But if I don't put a stop loss and I say, let's see tomorrow what will happen. Now tomorrow, one big guy, a hedge fund or someone who is selling, just a mutual fund who is selling. You know, mutual funds, when they sell, it's a sell off. When the price goes down, all the day traders look at this stock going down so fast, so they join and they short the stock. That's why you are in great danger. If you don't go out, they crush you and they take a big chunk of your money. If you lose 10%, 20%, 30% of your money, well, what is it left for you? Nothing. That's why beginners always lose their money in the first year or second year. They lose everything. Why? Because of the carelessness. It means they are careless. They don't take trading as a business. They take it as gambling, as they gambled before. They buy a ticket, they scratch. No, it's not the good number, not the jackpot. But you will do this gambling all your life, and you will make no money. Even if you make 100 or 200, or sometimes those people who do little stuff like this. But here you are doing gambling. You put all your future on hope and luck. But in business, there is no luck, there is no hope. You are doing business. If I buy a stock at 50, if it goes up, I stay. I stay until I make a good profit, and then I exit. But if I buy today 50, tomorrow is 49. Okay. The other day is 48. Oh, that's scary. You stay more. 48, 45. I say, okay, I know this stock will go up. I know. Someone tells me that these kind of stocks, they go down and they go up. And this is what I read in the book of one guru of trading and investing and so on. Okay, if you want to stay with these gurus and with this famous investor, stay with them. But believe me, when you lose your shirt, you don't find no one to listen to you, because the market doesn't listen to you, doesn't say nothing to you. The market is a free thing. They ask you, okay, you open an account, you buy stocks, you sell stocks, do whatever you want. This is the most democratic place in the world. No one obliges you to do anything. You come to the stock market, you buy the stock, you lose the money. Okay? You do it by yourself. Okay? So, try to imagine this. Okay? If you have some money in your hand and someone tells you, okay, we try to make a bet. Okay? Two guys, you and another guy. The stock is 50. You say to your guy, if the stock goes up, you should pay me. Okay, without going to the stock market. Let's say it's just a bet outside the stock market. It's just a normal thing. You say, okay, each day at 4 o'clock, when the stock market closes, we do this bet. Okay? Now, today, the stock market stops or ends at 4 o'clock and the stock is $50. You do a bet. You say to your friend, if tomorrow the stock goes to 51, 52, okay, because I think that the stock go up, you give me money. let's say 100 shares, so it means you give me $100. If it goes to 51, $200, it gives you 52, 53. But if it goes down, you should give money to the other guy. 48, you give him $100. 48. This is just an example. Now, here, I'm telling you, you feel the money. Because tomorrow when you have 48, your friend comes to you and says, it's 4 o'clock, and the stock from 50, it goes 48, I need my $200. You give him $200. Now you feel the money. You feel that you are losing. But, because you are obliged to give him the money, it's a transaction. But in the stock market, when you buy a stock at 50 and you don't put stop loss, there is no transaction. You don't want to think that you lose, as if the market, as if you control the market. You can't control the market. Whatever strategy you have, whatever you are, even you are one of the best gurus in trading in the world, if you ask him, can you guarantee me that tomorrow the stock will go up? If he say yes, I say okay. If it goes down, you give me money that I lose. There is no guarantee. See this in when you are, for example, when you are having the mutual, the 401k. This is just an example. Your employer gives you the 401k, which is a saving account. It is not a retirement plan. Okay? Try to remember. 401k is a saving account. It is not a retirement plan, because nothing is for sure. Okay? Nothing is for sure. Now, when you put your money into the 401k, okay? Do they give you a guarantee that your account will grow year by year? Certain percentage or certain things, or they say to you never lose? No! They will never say to you anything. You say, okay. They don't even speak about going, that you lose money. They always speak about, oh, you grow your money, you grow your money, you grow more money, and today, to this year 1,000, next year 2,000, 4,000, 10,000, and you become dreaming. But suppose that you have $100,000 in your account, and you retire, and that year when you retire, there is a big sell-off in the market, like when it happens in 2008, or in 1987, or in 1929. This happens always. It happens always. A big sell-off, and the market lost 50% of its worth. Let's say you have 50,000. When you check your account, you find 50,000. To whom you should ask, where is my 50,000? You lost it in the market, because you are in the market. When you are in the market, you have risk. Okay? You should have risk. But suppose that for me, let's say for me, I have 100,000 and I enter a trade. I make you the difference between 401k and my account. Okay, if I buy a stock, $100,000, I buy a stock. Now I should put a stop loss. If the stock I am buying is going down, I sell. Now why should I sell? Because I don't want to lose too much money in my account. Let's say I lose 2%. Now, $100,000, if you lose 2%, you lose $2,000 in, for example, 1 week or 2 weeks or 3 weeks, because you enter a trade. Okay, that's good. But if you are in the 401k, if you have 100,000, the guys who have the 401k, they can't sell at $98. Why? Because of the rules of the Security Exchange Commission. Okay, they can sell everything. They can sell a little bit, 10%, 20% of all the account, but they can't sell everything. That's why who get the biggest hit in history are those who invest for the long run. Sometimes when things come bad, they lose too much money. Okay? And as I told you in this video, all what I'm speaking about is stop loss. Stop loss is the cornerstone of your trading. It's like the backbone. It's like your back. It backed you up because it stops you from losing money when you are in a bad trade. Okay, this trade is bad, you exit, you find another trade, and next trade will be better, and you make money. So why you should stay in a bad trade? Why you should lose all your money in one trade? And this is a bad idea. That's why here I'm trying to explain as much as I can, because still I get opinions, I get a lot of emails, private emails, comments speaking about stop loss as if it is a bad luck. You say to me, oh, I buy a stock at $10 and I think it goes up in the future, 1 year or 2 years. So why you ask me to put stop and exit the trade? The stock is good. I tell him, okay. How do you know? Who tells you that the stock $10 will go next year to $15? Who tells you? You ask yourself, because you don't ask yourself. You don't ask yourself as if you know the future. If you know the future, you become a billionaire in a few days. A billionaire. I don't say millionaire. I'm telling you, if you know the future, in a few days you become a billionaire in the market. Okay? But the problem is that no one knows. Now, since no one knows the future, what you should do, you should protect yourself from doing bad things, because your feelings, your hope, your greed, all this interfere in your trading. Instead of doing business, you are not doing business anymore. You are doing gambling. That's why some people, I have been contacted with someone who is 20 years trading. He told me, I have never seen money. He gets some money and he loses it. He gets some money and he loses it. Because there are mistakes in his trading, and no one tells him that it is a mistake in order to correct his mistakes. Because in trading, how do you become a professional trader? Is through mistakes. You do a mistake and you recognize it, and then in the future you try not to do the same mistake. Okay? Always remember, put rules on the wall when you are trading, and before you do any trade, you see the rules on the wall. I shouldn't do this. I should put stop loss. I should do that. I shouldn't go to do penny stocks because they are risky. I should do this and this and this and that. Now, when the stock is okay and it's good for you to buy, you buy. And you put stop loss, and that's it. If it goes up, you are making the money. And this is the goal of trading, is to make money, not to lose money. Okay? Even if you lose money, little money, it's accepted because it's part of the game. If someone tells you, I'm trading and I have never used a trade, tell him from me that you are a liar. Okay? Tell him you are a liar, because it doesn't exist. Because how do you know? Do you know the future? You don't know the future. How can you say to me that all your trades are like winners? You can't. And all the professionals know. That's why there are some people online. They give you false information. They give you, in order to impress you, that they can make 1,000% a year, 2,000 a year, and they're to impress you and to let you dream. Here in my channel, I don't let you to dream. No dreaming here. Because dreaming, it means you sleep and you dream. For me here, you don't sleep. You wake up, you do your trades, put stop loss, and then you can make the money. If you lose a little bit, no problem, because no one knows the future. Okay? And that you can become a professional trader when you correct your mistakes. Now, if you want a very rapid growth, you should find a trainer, someone who knows, who teaches you, at least you get the basics, if you don't know the basics. Okay? Because there are a lot of things that if you don't know, it will stop you from making money. Okay? For example, you buy a stock at $10, it goes to $11, and then you sell. Oh, you say, okay, I have $100, I have a profit. You are happy. But the stock from $10, after 1 month, it goes to $20. Instead of having $1,000 as a profit, you have $100. That's why you cannot make it in the trading. In trading, it's so simple, but the people they try to make it difficult. And if you go online and you check other people, when you see their chart, you see a lot of stuff. Lines like this, lines, one going up, one down, colors, clouds. I don't know what's this, bowling band or something. Clouds in the chart, and they give you lines. They cross, buy. If they cross again, sell. Okay, and check the volume. Check, I don't know what is it. So they confuse you, and they say to you that we are professional, they will making the money. They are not making the money. Okay? So the only thing they do is they try to impress you. Will you follow them? Even if you follow them 1 year, you will never understand what they are doing. Okay? As if these guys, when they speak, as if they know the future. Oh, okay. I have seen something they say live, but it is not live. They say it's live in stocks, in forex, in futures, and you see the guy speaking like this. Oh, here, okay, here the line, okay, you enter here, okay, you stay 1 year, 2 days, 3 days, now, okay. So when you are listening to this guy, you will never understand what he is doing. And you will see a lot of lines. One is red, was green, was yellow, clouds, volume. You check this, you go to the news, you check if there is any news. It means they want to put as much information to your head that you can't process. And they think that they try hard to impress you, and in real life they are not making any money. All this is virtual accounts, and they know about trading, but they don't trade because they lose money. Okay? I see some people having a channel from 8 o'clock to 4 o'clock. I send an email to someone. I say, if you are staying like this, doing live videos, speaking, what do you trade? Because when you trade, you should be alone. Trading is a lonely activity. When you are at home, you should be alone. You should have an office, and you should trade. Okay? You should concentrate on your job. It's a job. It's a business. You make money from it. It's not a game. You cannot have 6 or 7 and you begin to play play a game, and you say, okay, we buy here, we sell here, and you put some stuff. And this is not true. And all these people who are showing this, they are not true. They are not making money. They are making what we call TV shows about stock market. They say, I will show you what the market is doing today. Which market? Each stock is different. Each industry is different. Some industries are going up, other industries are going down. So which market are you speaking about? The whole market? And if you tell me the whole market is up, am I making money? I am in one stock of those that you are making money. Oh, the Dow is going up today. It's very good. Okay, it's very good. Have you made money today? When they give you the results, you don't need someone to give you the results of the day. Okay? Because you go online, you find the facts at the end of the day. But these facts, it is a past. People are looking for the future, now and the future. They are not looking into the past. But all what you see online is the past. This is the problem. Okay? It is only the past that they show. Now, at the end of this video, if you still have problems with the stop loss and any ambiguity or any confusion, please write back, okay? Comment on this video or send me a private message and subscribe if you don't. Thank you very much.